Well, the last couple of days as a crypto investor have honestly felt better than most recently. Bitcoin's price is pushing up towards $90,000. Altcoins are up anywhere from 10 to 20%. And as a result of this, most crypto investors are honestly feeling pretty dang on optimistic. Now, although I do share a ton of that optimism, and I do feel pretty good myself looking at my portfolio today, I am recognizing that there's a little bit of an issue with this pump that we're seeing in the market, and I just wanted to bring it to your attention. Now, if you don't know who I am, my name is Tyler Hill. I am one of the co-founders of the Crypto Strategy School, one of the biggest schools in crypto, and I've been investing in crypto for over 7 years. And today we're going to go in exactly why the market's pumping, what I think about that pump, and what this little problem is that I'm noticing with the pump. And so since we have a good bit to unpack today, look, let's not waste any more time at all, and let's get straight into the video. Now, as you can see here, as I mentioned before, the crypto market's looking pretty dang on good. You got things like Render, FET, Link, Gala, Barra, STX, S, Sweet, and many more putting in some pretty sizable gains. Matter of fact, the last 7 days, even within the top 10, have been looking pretty dang on good. Bitcoin up around 6% in the last 7 days, Ethereum up nearly 10%, 7% for XRP, 13% for Solana. I mean, this is a really good performance, especially when you consider the absolute just travesty that this market's been for the last couple months. If we look at Bitcoin's price specifically for an example, I mean, this thing has moved all the way from as low as 76,000 up around 15% towards 88,000. And again, like I mentioned before to you, things are looking pretty solid. Now, the reason that this is happening, the reason why the market is pumping is really due to these two main points. Point number one. Trump's April 2nd tariffs may not be as severe as expected, improving market sentiment. So now that we are a little bit deeper into this whole kind of campaign of tariffs that we've been seeing from Trump and his administration, we're starting to notice the market easing up a little bit. People are freaking out a little bit less about it. They're not as worried about it. They're not as concerned. And so as a result, the market's responding better. Now, in addition to that, the Federal Reserve plans 2 rate cuts in 2025 and said that they consider tariff-related inflation temporary. So to make it even better, the Fed came out and said, listen, yeah, there may be a little bit of inflation as a result of what we're going to see, of course, from Trump's tariffs, but we think this is only temporary, and we do believe that the overall economy is still moving in the right direction. And so by them saying that, and of course, just us getting a little bit deeper into this tariff campaign, people are starting to just feel a little bit better. They're feeling more comfortable. The immediate emotional response of tariffs isn't so active right now, and so the market's in a bit of a better place. Now, the market is also anticipating that what we're going to see on March 27th won't really be all that bad. On March 27th, we have a Senate Banking Committee hearing and the Fed's PCE inflation reading. And what I think is happening right now is that people are anticipating that the PCE inflation data won't be that bad. Now, I'm not saying that in the sense that it might not come in kind of high or kind of hot or bad, but I think more what people are anticipating is that even if inflation data does come in a little bit bad, no one's really going to care because they're just going to say, well, the Fed said that we do have some inflation problems as a result of tariffs, but they're not going to last that long. And so even if we do see inflation data come in not so great, I don't really think the market's going to respond all that negatively to it because they're going to just say, oh, well, that's just temporary stuff like the Fed said. And so it's kind of a win-win. Inflation data is either going to come in at expectations or good, which is good, or it'll come in a little bit rough, but people will make an excuse for it anyway, and no one's going to really respond that badly. And so since people are kind of seeing what's happening with tariffs getting a little bit better, and the Fed's not that worried about it, and they're not that worried about it now, people are getting more confident. They're getting more comfortable, and they're buying crypto. They're buying Bitcoin. They're buying altcoins. They're getting a little bit more comfortable and confident to the point where they can go buy an S token or Solana or Algo. And that's why the market's up today. That's why it's doing so well, and that's why it's doing so well over the last week. Now, for the most part, I don't disagree with any of that. I don't think there's really a problem with that sentiment. People are bullish about the economy, they'll be bullish about crypto. I think that's fine. But I do kind of have a problem with some of the underlying things that I'm recognizing about this pump when you peel back the curtains a little bit. And that's what I want to share with you today. So, at its core, I think this pump is fine. But what's happening during this pump is a little concerning. That'll make sense in a second. Now, Tyler, why is it concerning? Well, first and foremost, before I get into why it's concerning, don't forget, if you are an experienced trader, someone who's been trading for a while and you know what you're doing, and I'm talking to you specifically, don't forget to head to the link down below. Guys, go get that 10% bonus on BTCC. Any deposit you make between $500 and $100,000, they're going to give you 10% back to start trading with right there on the spot, no strings attached. Guys, this is tens of thousands of dollars in free trading money that you can have if you sign up and deposit with the link down below. Again, if you're an experienced trader, don't miss out on that. That would just be nonsensical. Head to the link down below. Go check that out. Let me know what you think. Now, let's kind of get into why what we're seeing from this pump is a little concerning. Okay. I'm not going to say I'm worried about it. I'm not stressed about it. I'm not scared of it, but it is a little bit concerning. So, to give you some context, do you remember how I made a video not that long ago and I told you that in order for me to say that the crypto market is back in a bull market, a real bull market, three things need to happen? I told you we need to break out of the descending wedge, which looks like this, okay? This descending wedge, this descending channel that we're in. I told you that we need to see Bitcoin specifically break above the 50-day moving average, this yellow line right here. And then lastly, we needed to see it break above the golden Fibonacci zone, this yellow box up here. Do you remember how I told you until we do those three things, I'm not going to say we're back in a bull market? Well, I still feel that way. I still am under the belief that no matter what really happens, until we start doing those three things, breaking the descending wedge, this yellow line and this yellow box, we're not back in a confirmed bull market. And no bullish price movement is confirmed bullish price movement. This could just be recovery. This isn't a breakout. This isn't market change. This isn't structural change. This is nothing. This is just a pump, which could just be another pump. That could just be another dump right behind it. So now that you remember me saying that, I want you to look at where we are right now. We're still in the descending wedge. We're still below the 50-day moving average. We're still below the golden box. Well, Tyler, why does that matter? I mean, we've just not gotten there yet. What's the big deal? Why is this concerning? Well, the reason that this is concerning is because people are betting big already. If you go to coinglass.com and you go to your 7-day liquidations across all exchanges, you'll see that there are now nearly $8.5 billion worth of liquidations that will happen if we see Bitcoin's price fall back towards $78,000, which is only a move like this. What this means is that where we are right now, people are betting huge money that Bitcoin's about to rally, that crypto is about to continue pumping. And the problem with that, sure, it may sound good. Oh, people are bullish. Yeah. But the problem with that is that all of these people are making these huge bets while we still have three massive points of resistance right above us. Descending wedge, 50-day moving average, golden zone. And so what this means is that people are making these bets right now because they're just getting overzealous. They're getting overconfident. They're getting greedy. They're getting too optimistic. They're getting too greedy, in my opinion. And betting huge leverage like that without us taking at least one of the three steps is a mistake. I don't think that's a good idea. Because we got this massive level of resistance that we're about to run into at $90,000, this massive level of resistance at $90,200, this massive level of resistance a little bit higher around $95,000. I mean, guys, we have huge battles. The bears are waiting for us there. There's a huge army of bears sat at this descending channel, sat at this 50-day moving average, sat at this golden zone. And so going on huge leverage right now makes me a little concerned. Anytime that we pump throughout history and people bet huge amounts of leverage before we take even one step in the right direction, it doesn't usually go well. And that's what I'm concerned about right now, is that we're going to run into a major level of resistance. We're going to get rejected back down, and we're going to get forced back towards the low $80,000s to high $79,000 levels. And all these people who are betting huge right now are just going to get liquidated. Because the reality is this, guys, there ain't that many shorts left to squeeze here on some of these shorter time frames. Look at the 1 day. Maybe about 1 billion. Maybe we do push towards 90,000, but past that, there's not much. On the shorter time frames, there's not that many shorts left to squeeze, but there's a lot of longs to get liquidated, and it concerns me. Now, am I saying for sure that Bitcoin's going to get rejected here? No, obviously not. Listen, I think at some point, we're just going to rally, and we're going to rally and not care. We don't care about liquidations. We don't care if people are too greedy or overzealous. This market's just going to rally, rally, rally. I think that day is going to come like it has many times before. And that might be now. Yeah, maybe we do use all this bullish divergence. I mean, look at what happened. Like, we got to be reasonable here, right? Like, we put in this bullish divergence. Look at this. Let me see if I can get this pulled up here. Boom. Look at what happened with the RSI. Look at this low, higher low versus the price putting in a low, lower low. Guys, that's bullish divergence. At the same time that we put in this bullish divergence, our Elliott's waves confirmed that we could have just put in a technical C wave on a macro perspective. At the same time that that's happening, you can look at something like your MACD and you'll notice just how oversold it was. You look at your fear and greed index. We were at some of the lowest levels we've been at in years down here. So I'm not saying that we can't rally out of here. I'm not saying that this might not have been the bottom and that we might, we very well could do these things. But what I am saying is that the people who are betting super huge on leverage right now that it's going to happen are putting us at risk. And they're putting everyone at risk that the whales are going to look and want to hunt those liquidations and force the price of Bitcoin back down to liquidate those people before maybe giving it another try. And so my thought process behind this thing is that I need to avoid this like the plague. I don't want to be caught up in this. When there's a huge level of resistance sitting right above us, but there are gigantic amounts of liquidations below us, that's a perfect formula for some sort of pullback. And although it's not guaranteed, it is a very big possibility. And so what do I do right now? I avoid it like the plague. What do I mean? I'm not buying right now. I'm not buying into the hype. I'm not opening leverage long trades. I'm not doing any of that. Matter of fact, I might go in and I might take some profits. Because the reality of it is this: we have a huge battle sitting directly in front of us. And until we have a clear deciding victor of that battle, whether the bulls push out of this descending channel or not, no one knows what's going to happen. And everybody thinking they know what's going to happen by opening these huge leverage trades is just making it more likely that it doesn't happen. So my strategy right here is that, yeah, over the next 24 hours, I might start taking some profits off the table. I might sell a little bit of my Solana, maybe a little bit of my ETH. Because remember, we were here on this channel buying all of these things during the bear market. We were buying at way lower levels. And so taking profits during a time like this where everyone's confident that we're just going to rally out of this, but we have huge battles sitting in front of us still, maybe taking those profits isn't such a bad idea. And I'll figure that out. And then whenever I do decide what I'm going to do, I am going to post it over in the server, so check that out. But that's kind of where I am. This is a risky game we're playing right now, guys. This pump feels good and it feels exciting and it feels bullish, and I would agree that things do seem fun, but the reality of it is that there's still huge battles in front of us and people are taking gigantic risks right now. I hope we pump. I hope we get through this. I hope we win the battle because I want to get back in the game, guys. I want to start leverage trading again. I want to start swing trading again. I want to start buying more frequently. I want to do those things, but I won't allow myself to do it when I know better. And what I know is that we have this level of resistance and this one sitting right above us with a ton of liquidations below us. That is a perfect formula for a liquidity hunt that's disguised as a rejection. And that's what I'm being careful of, and that's what I'm concerned of. Okay. So if you do want to see my next move, my next play, my next plan, whenever I do make a move here, whether I take profits or not, I will tell you that is available. It's over in the school that I told you about in the beginning of the video. Guys, in our school, we have a very simple strategy. We take crypto investors like yourselves. We give you coaching, workshops, classes, signals, and much more. I mean, tons of value. Just look at this side of the server right here. Tons of value. And the whole purpose of doing that is to help you create strategies, because a strategy is what creates a winning investor. And I'm not talking about a winning investor who makes a little bit. I'm talking about a winning investor who makes a lot. I mean, I can just endlessly scroll through the chat and you can see the hundreds of thousands of dollars being generated by this community every single day. Millions of dollars in profits. Look at that, a $15,000 trade on Tesla this morning. So if you want to check that out and get access to all this value, and again, what I'm going to be doing myself, the link is in the description down below to the Crypto Strategy School. Go check that out. But in the meantime, all that I ask from you is to be very careful right now. I feel like I'm always the one who's screaming to be careful, but hey, how's that worked out for us? We've avoided most of this because I'm screaming like a maniac to be careful, but I really need you to right now. Because again, the reality is we have a huge battle sitting right in front of us and a lot of liquidations below us. And that could be the perfect formula for some sort of liquidity hunt. So I'll keep you updated as this all does play out. Stay frosty. Be careful. If you are a trader, go get your bonus. Don't miss out on this because it won't last forever. And go check out the school. It is linked down below. If you do want a little bit more behind the scenes information from me, I do post a ton of stories and shorts and reels and all this stuff over on Instagram. So the link to that will be in the description down below. And don't forget to go follow me on Twitter as well at TylerHillYT. But of course, I hope you guys did enjoy today's video. If you did, don't forget to let me know by smashing the like button and subscribing to the channel if you are new. And I can't wait to see you all in the next one. Peace out, everybody.